If you were born in the 1940s or 1950s, the Social Security Administration has quietly made changes that could directly affect your monthly check, your Medicare costs, and your retirement security. And most people born in those decades have no idea this is happening right now. We are talking about millions of Americans, people just like you who worked hard their whole lives, paid into the system for decades, and now deserve every dollar they earned. But right now, today, some of those people are leaving real money on the table simply because they do not know about these new categories the SSA has put in place. You deserve to know about this. That is why we made this video. Here is what is at stake. The SSA has reorganized how it classifies certain benefit adjustments based on your birth year. If you were born between 1940 and 1959, you fall into one of these new categories. And depending on exactly when you were born, the rules around your benefit calculations, your earnings record reviews, and your Medicare premium adjustments may be different than what you assumed. The people who understand these categories are positioning themselves to get more. The people who ignore them are quietly losing out. The difference can be hundreds of dollars every single month. Stay with us through this entire video. We are going to walk through exactly who is affected, what the changes mean in plain language, and what specific steps you should take right now to protect your benefits. This is not complicated. You do not need to be a financial expert. You just need the right information, and we are going to give it to you today. If this channel is new to you, now is the perfect time to hit that subscribe button and tap the bell icon next to it. Turn on all notifications. This channel covers time-sensitive Social Security and Medicare updates that seniors often miss because the government does not advertise them clearly. When a deadline is coming, we will make sure you know about it in time to act. Now let us get into this. The Social Security Administration manages benefits for over 70 million Americans. It is one of the largest and most complicated government programs in existence, and every few years, the SSA adjusts how it handles certain classifications of beneficiaries. Most of these adjustments never make the evening news. They get buried in policy documents, tucked away on government websites, written in language that is nearly impossible to understand without a law degree. That is a problem, because these adjustments affect real people, real families, real monthly budgets. Here's the background you need to understand why birth year matters so much in this system. When the SSA calculates your Social Security benefit, it uses something called your primary insurance amount, or PIA. Your PIA is based on your 35 highest earning years. The agency adjusts those old earnings using what are called indexing factors, which account for wage growth over time. These indexing factors are tied directly to the year you turn 60, not when you file, not when you retire. The year you turn 60, this means someone born in 1945 had their earnings indexed using 2005 wage data. Someone born in 1955 had their earnings indexed using 2015 wage data. The wage growth between those two periods was significant, and the exact indexing factors used can shift your benefit amount by more than you might expect. Now here is where the new category system becomes important. The SSA has updated how it internally groups beneficiaries for certain administrative reviews and benefit recalculations. People born between 1940 and 1949 are now grouped in what the agency refers to as the early post-war cohort. People born between 1950 and 1959 are grouped in the mid-century cohort. These are not just labels. They trigger different review timelines, different documentation requirements for appeals, and in some cases, different eligibility windows for certain supplemental benefit corrections. The practical result is this. If you are in one of these groups and you have not had your earnings record reviewed recently, there is a real chance that your benefit is being calculated on incomplete or incorrect information. The SSA estimates that roughly 1 in 5 earnings records contains at least one error. For seniors who worked in the 1960s, 1970s, and 1980s, when paper records were the standard, those errors are even more common. An uncorrected error does not just affect 1 month, it affects every single payment for the rest of your life. If your benefit is short by even $80 a month due to a record error, and you live another 20 years, that is more than $19,000 in lost income. Gone. Because of a mistake that could have been fixed with one phone call or one visit to your local SSA office. This is exactly why these new categories matter. They are the SSA's way of prioritizing which groups of beneficiaries most need their records reviewed. If you fall into these birth year categories, you are in the priority window right now. If this video is giving you useful information, please take a moment to give it a like and leave a comment below. Tell us what year you were born, or share a question you have about your own Social Security situation. Your comment helps other seniors find this video, and it helps us understand what topics matter most to this community. So what should you actually do with this information? The first step is the most important one. You need to check your Social Security earnings record. This is free. It takes about 10 minutes, and it could make a significant difference in your monthly income. You do this by creating or logging into your account at SSA.gov. Look for the section called My Social Security. Inside that account, you will find your complete earnings history, year by year, going back to the very beginning of your working life. What you are looking for are gaps, missing years, or years where the earnings shown seem too low. If you worked in 1972 and know you earned money that year, but the record shows 0, that is an error. If a year shows earnings of $4,000 when you know you earned $18,000, that is an error. Every one of those errors is potentially reducing your benefit right now. You have the right to dispute any error in your earnings record. You do this by contacting the SSA directly. The national number is 1-800-77-21213. You can also visit your local Social Security office in person. When you dispute an error, you will need documentation. Old W-2 forms work best. Tax returns from the relevant years are also acceptable. If you do not have those, pay stubs, employer letters, or even union records from that period can support your case. The SSA is required to investigate your dispute and respond in writing. Do not give up if the first response is not in your favor. You have the right to appeal, and many seniors who initially received a denial have had errors corrected on appeal with the right documentation. Now let us talk about the Medicare connection, because this is where the new birth year categories have a second important impact. Most Americans know that Medicare Part B premiums are deducted directly from your Social Security check. What many do not know is that the amount you pay for Part B is determined by your income from 2 years prior. This is called IRMAA, the Income-Related Monthly Adjustment Amount. It is a surcharge applied to higher earners. Here's the problem. Life changes fast. You might have had a high income year in 2022 because you sold a house, took a required minimum distribution from a retirement account, or had a one-time pension payout. The SSA used that 2022 income to calculate your 2024 Medicare premiums. And now you are paying a significantly higher premium based on income you no longer have. This happens to thousands of seniors every year, and many of them have no idea they can appeal it. The appeal process for IRMAA is called a life-changing event appeal. You file it using SSA Form SSA-44. You can download this form directly from SSA.gov or pick it up at your local Social Security office. The form asks you to document the life-changing event that caused your income to drop. Qualifying events include retirement, the death of a spouse, divorce, and loss of income-producing property. If your appeal is approved, your Medicare Part B premium gets recalculated based on your current lower income. For some seniors, this reduces their premium by $200 to $400 per month. That is money that stays in your pocket every single month for as long as your income remains at the lower level. The new birth year categories matter here because the SSA has expanded the window for certain seniors in the 1940 to 1959 cohorts to file retroactive IRMAA appeals. In plain terms, this means you may be able to appeal for past months you were overcharged, not just going forward. The retroactive window depends on your specific situation, but it is worth asking about directly when you contact the SSA. If you know someone who was born in the 1940s or 1950s, a parent, a grandparent, a neighbor, a friend who is approaching retirement or already retired, please share this video with them right now. Pause. Send this to them. This information is time sensitive, and many seniors will never hear about it unless someone they trust passes it along. Let us talk about another major piece of this, delayed retirement credits and how the new categories affect them. You may already know that you can claim Social Security as early as age 62, but your benefit will be permanently reduced if you do. You may also know that waiting until age 70 earns you delayed retirement credits, which increase your benefit by 8% for each year you wait past your full retirement age. What many seniors do not realize is that the SSA can sometimes make calculation errors on delayed credits. This is more common for people who claimed benefits after a period of going back and forth about when to file, or who suspended their benefits at any point to earn additional credits. If you suspended your benefits between age 66 and 70 to earn those extra credits, your benefit should have increased by exactly 0.667% for each month you waited. That adds up to 8% per year. If you earned 4 years of delayed credits, your benefit should be 32% higher than your original full retirement age amount. Take a close look at your current benefit amount. Use the SSA benefit calculator on SSA.gov to verify that the delayed credits you earned are fully reflected. If the numbers do not match up, call the SSA and ask them to walk you through your benefit calculation line by line. The SSA customer service line is 1-800-772-1213. When you call, ask specifically for a benefit statement that shows how your PIA was calculated and how your delayed retirement credits were applied. This is a standard document the SSA can provide, and it gives you the specific figures you need to check the math yourself. Errors in delayed credit calculations are not common, but they do happen. And when they happen, the impact is permanent and cumulative. Getting it corrected could mean thousands of dollars recovered, potentially even with back pay for the months the error was in effect. We would love to hear from you right now. Scroll down and leave a comment. Tell us whether you have ever checked your earnings record for errors, or share whether you have dealt with an IRMAA surcharge situation. Your experience helps other viewers understand they are not alone, and it helps our community learn from each other. Now let us spend some time on a resource that is dramatically underused. It is called the Social Security Statement, and under the new category system, seniors in the 1940s and 1950s birth year groups are being encouraged by the SSA to request updated statements more frequently. Your Social Security Statement shows your estimated benefit at age 62, at your full retirement age, and at age 70. It also shows your full earnings history and flags any years with zero or unusually low reported earnings. If you have not looked at this document recently, please do it this week. Log in at ssa.gov and download your most current statement. Print it if it helps you review it carefully. As you look through the earnings history section, keep a simple personal log nearby. Write down every job you held and the approximate years you worked. Compare that list to what the SSA shows. Anything that does not match is worth investigating. There is one more resource that we want to make sure you know about. It is called the Benefits Counseling and Assistance Program, operated through your State Health Insurance Assistance Program, which you know as SHIP. SHIP is a federally funded program that provides free, unbiased counseling to Medicare beneficiaries. Trained counselors can help you understand your Medicare options, appeal IRMAA surcharges, and identify programs that lower your healthcare costs. To find your local SHIP counselor, you can call 1-800-MEDICARE, which is 1-800-633-4227. You can also visit the official SHIP website at shiphelp.org. Counselors are available in every state, and the service is completely free. There is no sales pitch, no agenda. These are volunteers and staff dedicated specifically to helping seniors like you navigate the system. This is a free service that too many seniors never use. Please write down that phone number, 1-800-633-4227. If you are not yet subscribed to this channel, this is a perfect moment to do that. Hit the subscribe button right now. It is completely free. Every week we cover Social Security updates, Medicare changes, benefit deadlines, and practical financial guidance for people in and approaching retirement. Our goal is simple. We want to make sure you never miss something that matters to your financial security. Now let us bring together everything we have covered today with a clear action plan. First, log into ssa.gov and review your earnings record. Look for missing years or years with lower than expected earnings. If you find errors, contact the SSA at 1-800-772-1213 and gather your documentation, including old W-2s, tax returns, or employer records. Second, check whether you have been affected by an IRMAA surcharge. If your income dropped significantly in the past 2 years due to retirement, the death of a spouse, or another qualifying life event, file SSA Form SSA 44 to appeal your Medicare Part B premium. This form is available at ssa.gov or at your local Social Security office. Third, download your current Social Security statement and verify that your estimated benefit amounts make sense based on your earnings history and any delayed retirement credits you earned. If the numbers seem off, call the SSA and ask for a detailed benefit calculation statement. Fourth, contact your local SHIP counselor if you have Medicare questions. Call 1-800-633-4227 or visit shiphelp.org. This service is free and available to you right now. Fifth, act soon. The SSA's review prioritization for the 1940 to 1959 birth year cohorts is happening on a rolling timeline. The earlier you check your records and correct any errors, the sooner your benefit can be adjusted. Delays do not just cost you future income. They may reduce the amount of back pay you can recover. You worked your whole life for these benefits. You paid into the system for decades. You deserve to receive every dollar you earned. The SSA makes mistakes. The system is complicated. But with the right information and the right steps, you can protect yourself and make sure your retirement is as secure as it should be. We are grateful you spent this time with us today. If this video helped you, please give it a thumbs up before you go. It takes 1 second, and it helps more seniors find this information when they need it most. And if you know someone born in the 1940s or 1950s who might benefit from what you learned today, please share this video with them. Text it, email it, post it somewhere they will see it. You could genuinely make a difference in someone's financial situation just by passing this along. We will be back soon with more updates on Social Security, Medicare, and the programs that matter most to your retirement security. Take care of yourself, and we will see you in the next one.